Hey everyone, welcome back to Corporate Decoder, the place where we look behind the curtain and see if companies are really what they seem or just a bunch of corporate wizards pulling rabbits out of hats. Today we're diving into a filing from KKR Capital Corp, and let's just say their latest meeting had a few interesting votes. So KKR Capital Corp is a company you might not immediately recognize by name, but they're involved in some pretty important financial activities. Think of them as a big player in the world of investment managing money and making sure businesses have the capital they need to grow. Now, this particular report is about their annual meeting of stockholders, but it's not just a regular meeting. It got a bit delayed. They had their initial meeting back in June, but they decided to push some important votes to a later date, August 15th, which is when this report is dated. This is often done when a company needs more time to convince its shareholders about a particular decision. To give you an idea of the scale of this meeting, on the record date, which was April 25th, a staggering number of shares were eligible to be voted. We're talking over 280 million shares of common stock. That's a huge amount of ownership power spread across many investors. And when they reconvened the meeting on August 15th, over 14 million of those shares were actually voted. This tells us that the shareholders were paying attention and cared about the outcome. The main event at this reconvened meeting was a proposal that might sound a little technical, but it has real-world consequences for investors. It was proposal number 2, all about giving the company permission to sell its own shares for less than their stated value, also known as net asset value in the future. Now, why would a company want to do this? The filing says it's for flexibility for future sales. In simpler terms, they want to be able to sell new stock more easily, even if market conditions mean they can't get top dollar for it. From a company's point of view, this can be a way to raise money quickly and efficiently, especially during uncertain economic times. For investors, however, this can be a bit of a double-edged sword. The voting results are quite telling. On this crucial proposal, over 102 million shares voted in favour. That's a pretty strong majority. However, there were still over 28 million shares that voted against it. This indicates there's a segment of shareholders who are either cautious about this new selling power or perhaps feel it could dilute the value of their existing shares. And then there were the abstentions, close to 9.2 million shares. Abstaining is like saying, I don't have a strong opinion either way, or I'm not comfortable voting yes or no on this. This number isn't insignificant, and it suggests some shareholders may have wanted more information or were hesitant to commit. Interestingly, there were 0 broker non-votes reported. Broker non-votes happen when a shareholder doesn't give their broker instructions on how to vote their shares, and the broker isn't allowed to vote them on that particular issue. A 0 here means everyone who wanted their shares voted got to vote them as they intended, which is generally a positive sign for a well-run shareholder meeting. So what does this all mean for KKR Capital Corp? They've gained the flexibility to issue stock at potentially lower prices in the future. This can be a powerful tool for raising capital, perhaps to take advantage of new investment opportunities or to shore up their financial position. It shows the company is proactively managing its ability to fund its operations and growth. However, as we saw from the votes against and abstentions, this move isn't universally applauded by all shareholders. Some may worry about the potential for their investment to be diluted if the company issues a lot of new shares at a lower price. It's a balancing act between providing the company with tools for future success and protecting the value of existing shareholder stakes. Looking at the overall picture, KKR Capital Corp seems to be operating with a strategy that prioritizes adaptability and future fundraising. The strong approval for the proposal suggests that the majority of their key stakeholders trust management's judgment in navigating potential market fluctuations. This could position them well to act quickly on investment opportunities that might arise from market dislocations. A key risk, however, is that if they need to raise capital in stressed markets frequently, it could indeed lead to significant dilution, impacting the earnings per share for existing investors. The company's ability to strategically deploy this new flexibility will be crucial in turning potential opportunities into actual gains without alienating its investor base. It's a move that signals a proactive and perhaps slightly defensive approach to financial management in what could be a dynamic economic environment. Alright, that's our breakdown of KKR Capital Corp's latest filing. What's your take on these numbers and what they signal for the company's future? Could this new stock issuance power be a golden ticket or a potential trap? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into the world of corporate finance. Don't forget to check out the Discord in the description for more discussions and insights. Thanks for watching. See you next time.